Greetings traders, my name is Anya Somodabuchi and I'm going to be your coach in this session. Before the end of this session, you should know the answers to the following question. What is impulsive moves in forex? Remember, do not compare yourself with anyone else's progress. Always keep a winning mind frame and you will do very well in this business. What is an impulsive move in forex trading? In trading, an impulse is defined as the strong move in a currency's or stock price coinciding with the main direction of the underlying trend. An impulse wave pattern is a technical trading term that describes a strong move in a financial asset. Price coinciding with the main direction of the underlying trend. Impulse waves can refer to upward movement in uptrends or downward movement in downtrends. Then the next question is, what causes forex to move? Currency movement, as in any other market, are driven by two main forces, the force of supply and demand. The same goes for currencies. When a currency increases its value, the demand is greater, or it means that the demand is greater than supply. And when a currency decreases its value, it simply means that its supply is greater than its demand. All right. So from this picture you're seeing here, you will understand what an impulsive move is. All right. Because the forex market moves like waves, zigzag patterns. All right. So as we continue in this video, you are going to understand what an impulsive moves are. All right. Now, this is another example of an impulsive move in a bearish direction. So, for instance, in a bullish trend, we usually have bullish impulsive move, retracement, bullish impulsive move, retracement, bullish impulsive move, correction or retracement, whichever name you want to give it. Pullbacks, correction, retracement, they all mean the same thing. All right. But it's not the same with reversals. All right. So in a bullish trend, we usually have price will give us a bullish impulsive move, a correction or retracement, and then a bullish impulsive move, a correction or retracement. In other terms, you can also call it a repulse, R-E-P-U-L-S-E, repulse. Just like we have impulsive move, we have repulsive move, all right? So this is bullish trend, impulsive move, all right? So you can also say that this is what bullish impulsive, retracement, bullish impulsive, retracement, bullish impulsive, retracement, you know. And then in a bearish trend, you could also call that bearish impulsive, retracement, bearish impulsive, retracement, bearish impulsive, retracement. All right. So in this picture you were seeing here, you could see that this was a bullish impulsive move, retracement, bullish impulsive move again. Or you can say that this is what bullish impulsive, correction, bullish impulsive. They all mean the same thing, you know. So in this bearish trend, you can say that this is what a bearish impulsive move, a correction, a bearish impulsive move, a correction, a bearish impulsive move. Now, the reason why as a trader this is very important is because it will help you to understand market patterns. Most persons don't really understand how forex market moves, and that is why they always complain of significant losses. All right. For instance, when you have a bearish impulsive move like this, you should also expect what? A correction or a retracement, and then you have what? A continuation of the same bearish impulsive move. And then again, you're going to also have what? A correction or a retracement of that same bearish impulsive move. All right, usually around 50% or 61.8% Fibonacci retracement levels, or 38.2% Fibonacci retracement levels. It all depends. So this is how you need to understand these things. And then you also have what? A continuation of what? The bearish impulsive move. So the problem is, most traders wants to sell in the first impulsive move of the market. For instance, someone is what? Putting a sell trade in this zone. Someone is putting a sell trade in this zone, and then after some hours they notice that the market has retraced against them, take their stop loss away by hit their stop loss, and still continue in what? The direction they were expecting price to go to. And they'll start to wonder why they keep having losses. And the next moment, you notice that what? They have noticed that there has been a breakout. There has been a break of this support. For instance, someone is launching a sell trade around this area. And after they noticed that the market was in profit, they also observed that all of a sudden the market is no longer in profit, or probably price must have taken them out by hitting their stop loss. And the next moment, they still realize that the market still went in the anticipated direction. And then you keep wondering, why are all of these experience? Why am I having this experience in my trading activities? It is because you don't have an entry strategy and you are entering in the wave of the market. You are supposed to enter a sell trade from what? This end of the retracement point in a sell market, which is usually what? The resistance. All right, so that as price drops, you make profit. Then in a buy trade, for instance, let's just assume that this is a bullish impulsive move. All right, and that's what the bullish impulsive move retracements, or you can call it a retracement or a correction or a pullback, whichever terminology you want to use. If you want to call it a repulse, it is still legit. All right, now as a trader, you're supposed to what? Look for entries around the end of the retracement, of the bullish retracement, so that as price increase in value, you make profit. So your entries, are supposed to be around this zone for a bullish trade, which is the support. You have to look for entries on the newly created support in a retracement. So you see, most traders will come, they're taking a buy trade along this zone, and when market retraces and hits their stop loss, all right, they just realize that the market still continued in the what? Anticipated direction, and they'll start wondering why these things are happening. It is because you don't understand impulsive moves in forex trading. Whether it is forex, cryptos, or stocks, whichever asset you're trading, these laws are applicable in all of them. So the reason why I'm making this video is to make you understand that price on the charts moves like waves. All right, it moves like wave. I have impulsive retracement, impulsive retracement, impulsive retracement, bullish impulsive retracement, and then we have bearish impulsive retracement, bearish impulsive retracement, bearish impulsive retracement. That is just how this thing works. So after this video, I'm expecting you to go to your trading view and see how these things plays out. Okay, I know that the next question you are supposed to ask, or you will be wanting to ask me, is, Mr. Possible, how do I know the end of the retracement? And that is why this video is to expose you to understand corrections, impulsive moves and corrections in a bullish and bearish trend in the market, or in the market structure, not a strategy to trade. Please, if you look at all my videos, I'm not here to teach you strategies on how to trade, but I'm here to break down all trading components for your own understanding, so that you begin to understand how these things works. All right, when you want to learn how to trade like a pro and become profitable, all right, for a lifetime, I think you should subscribe for our mentorship. You can log into prekani.com and then you subscribe to any of our products and services, and we are going to enroll you in our 1-year mentorship program where you will get mentored until you become perfect at trading. All right, so these videos I make them to let you know everything that you need to know, hence forex trading is concerned. All right, but when it comes to trading strategies, I think you have to enroll for our one-on-one forex mentorship, depending on the particular product you're subscribing for. They are all there on our website. All right, so this is also an example of an impulsive move in a bullish trend. Okay, you could see it from here, how price moved: bullish impulsive, retracement, bullish impulsive. All right, you can also say, you are right to say that this is what bullish impulsive, retracement, and then continuation. They are all correct. All right, so as a trader, you need to understand these things. When you say, sir, the market is making bullish impulsive moves, I will understand that the market is creating series of what? Higher highs and higher lows in a bullish trend. And if you say, sir, the market is making bearish impulsive moves, I will understand that the market is making what? A higher lows and a lower low, all right, in a bearish market trend. Is that clear? So we have what we call the dynamic impulsive moves. An example of that is this. Let me just show you quickly. Let me show you dynamic impulsive moves. Please just follow what I'm doing carefully. This is bullish impulsive, retracement, bullish impulsive, retracement, bullish impulsive, retracement, bullish impulsive, retracement, bullish impulsive, retracement. So all these things are dynamic because they are the bullish impulsive moves that are playing out on a lower time frame, but in the bigger time frame it is seen as what? A bullish impulsive move, a retracement, a bullish impulsive move. Understand? So I think that is all about impulsive moves. All right, so you just do well to go back and watch this video over and over again. That way you will understand better, and then you will know that the market, after making an impulsive move, will definitely make a retracement or a correction. I believe you have value in this video. Like I said, when you want to learn how to trade like a pro and how to be profitable in this industry, do well to do what? To contact us through our website, and we're going to enroll you in a 1-year mentorship program. Thank you so much, and see you on the part 2 of this video.